The benefits and risks of dividend-paying stocks. Dividend-paying stocks are a popular choice for investors seeking income and growth. These stocks provide regular income through dividend payments while also offering the potential for capital appreciation. However, like all investments, dividend-paying stocks come with both benefits and risks. Understanding these can help investors make informed decisions and build a balanced investment portfolio. Benefits of dividend-paying stocks. Explanation. One of the primary advantages of dividend-paying stocks is the regular income they provide. Dividends are typically paid quarterly and can be a reliable source of cash flow for investors, particularly those in retirement or seeking passive income. This income can be reinvested to buy more shares, compounding growth, or used for living expenses. Example: a retiree might invest in dividend-paying stocks to receive consistent income without having to sell shares. Explanation. In addition to dividend payments, these stocks offer the potential for capital appreciation. Companies that pay dividends are often well established with stable earnings, making them attractive for long-term growth. Over time, as the company grows and its stock price increases, investors can benefit from capital gains. Example: a company like Johnson & Johnson, which has a history of paying and increasing dividends, also offers the potential for stock price growth. Explanation. Many companies and brokerages offer dividend reinvestment plans, DRIPs, allowing investors to automatically reinvest dividends to purchase additional shares of the stock. This can enhance the power of compounding, where dividends generate more dividends over time, significantly boosting the long-term value of the investment. Example: an investor in a DRIP might start with 100 shares, but over time, through reinvested dividends, accumulate additional shares without any additional capital outlay. Explanation. Dividend-paying stocks, particularly those from well-established companies, tend to be less volatile than non-dividend-paying stocks. These companies are often in mature industries with stable earnings, making them less susceptible to market fluctuations. The regular income from dividends can also provide a cushion during market downturns. Example: utility companies, known for steady dividends, typically experience less volatility compared to tech startups. Explanation. Investors in dividend-paying stocks can benefit from both income and capital gains, leading to a higher total return over time. Even if the stock price remains relatively stable, the dividends can provide a significant portion of the total return. Example: a stock with a 3% dividend yield and a 4% annual stock price increase offers a 7% total return, which can be attractive in a low interest rate environment. Explanation. Companies that consistently grow the dividends can provide a hedge against inflation. As inflation rises, companies with strong earnings can increase their dividends, helping investors maintain their purchasing power over time. Example: a company like Coca-Cola has a history of increasing its dividend annually, which can help offset the effects of inflation on an investor's income. Explanation. In many countries, dividends from qualified stocks may be taxed at a lower rate than ordinary income. This tax advantage can make dividend-paying stocks more attractive compared to other income-producing investments. Example: in the US, qualified dividends are taxed at long-term capital gains rates, which are lower than regular income tax rates for most investors. Risks of dividend-paying stocks. Explanation. One of the significant risks of investing in dividend-paying stocks is the possibility of dividend cuts or suspensions. If a company faces financial difficulties or needs to preserve cash, it may reduce or eliminate its dividend payments. This can lead to a decline in the stock price and reduce the investor's income. Example: during economic downturns, some companies, particularly in the energy or financial sectors, have cut the dividends to conserve cash. Explanation. Dividend-paying stocks, especially those with high yields, can be sensitive to changes in interest rates. When interest rates rise, the attractiveness of dividend stocks may decrease as investors shift to bonds or other fixed income investments that offer higher yields. This can lead to a decline in the stock price. Example: Utility stocks, which are known for high dividend yields, often underperform in a rising interest rate environment as investors seek higher returns elsewhere. Explanation: companies that pay high dividends often reinvest less of their earnings back into the business. While this provides stable income, it may also limit the company's growth potential. As a result, dividend-paying stocks might offer lower capital appreciation compared to growth stocks that reinvest earnings to expand. Example: a mature company in a slow-growing industry might prioritize dividends over reinvestment, potentially leading to slower overall growth. Explanation: a high dividend yield can be attractive, but it might also signal underlying problems within the company. A sharply rising yield could result from a declining stock price, indicating financial distress. Investors who focus solely on yield without considering the company's fundamentals risk investing in a yield trap. Example: a stock with a 10% dividend yield might seem appealing, but if the company's earnings are declining and the stock price is falling, the high yield could be unsustainable. Explanation: investors who focus heavily on dividend-paying stocks, particularly in specific sectors like utilities, consumer staples, or real estate, may face concentration risk. If these sectors underperform or are hit by regulatory changes, the investor's portfolio could suffer significant losses. Example: an investor with a portfolio heavily weighted in utility stocks might experience losses if the sector is negatively impacted by rising interest rates or new regulations. Explanation: for investors holding dividend-paying stocks from foreign companies, currency fluctuations can impact the value of dividends received. If the investor's home currency strengthens relative to the foreign currency, the dividend income may decrease in value when converted back. Example: a U.S. investor receiving dividends from a European company might see the value of those dividends decline if the euro weakens against the dollar. Explanation: while some dividend-paying stocks can provide an inflation hedge, not all do. Companies that cannot increase their dividends in line with inflation may see the real value of their payouts decrease, reducing the purchasing power of the income stream over time. Example: a company with limited pricing power may struggle to raise dividends in an inflationary environment, leading to lower real income for investors. Conclusion: dividend-paying stocks offer several benefits, including regular income, potential capital appreciation, and lower volatility, making them an attractive option for many investors. However, they also come with risks such as dividend cuts, interest rate sensitivity, and potential limited growth. To maximize the benefits and minimize the risks, investors should carefully select dividend-paying stocks with strong fundamentals, a history of dividend growth, and solid financial health. Diversifying across sectors and considering the impact of macroeconomic factors like interest rates and inflation can also help build a resilient portfolio. Ultimately, while dividend-paying stocks can be a valuable component of an investment strategy, they should be evaluated within the broader context of an individual's financial goals, risk tolerance, and time horizon. I do not provide personal or financial investment advice, and I am not a qualified licensed investment advisor. This video's educational purpose is only to give you the basic idea. If you need a personal or financial advisor, please seek help. Embrace the journey, ignite your passions, and join us as we explore the extraordinary together. Please like the video, and turn on notifications for future uploads. Thank you.